mentioned my mic was not on. So let me go through then what I was just saying throughout all this. I apologize, everyone. So I was studying this gap, and then I said how, when we came above this high and rejected it off the new day opening gap, maybe this might work and go into this, but I didn't trust it. So I was pretending like, if let's just say I was in a trade, what would I be doing? So when this opened up, went up a little bit, and then it went down, I basically said, okay, as it's going down, I wanted this to engulf and I'd have a break even stop, or like not break even stop, but I wouldn't want price to come back into this gap. I wanted to engulf that candle, and then that didn't happen, obviously. And the reason I didn't really trust it very well is because I went up to the 5-minute chart and I talked about this large 930 gap, and then I said, here, let me let my buddy know it's working now. I was highlighting this large 5-minute gap and how price supported this gap, rejected from this gap higher, and so this is evidence of bullish order flow. And so I'd basically be trying to predict a market shift, taking that entry there. You go on a lower time frame, and the market shift would occur if we displace beneath this low, and obviously we didn't do that yet, and so I was basically trying to anticipate a market shift, but there was no evidence of bearish order flow, and so this is why I didn't want to take it. Also, there's 10 o'clock news, so in like 2 seconds, I was looking at the pending home sales and the different news releases at 8:30. So there you go, that's 10 o'clock news, going to drive price to buy side liquidity. I guess I'll go back over what I was thinking. Hold on, let me see what the home sales were. Wow. The inventories, no, not inventories, pending home sales, they they dropped quite a lot. Does that mean that doesn't mean it's bad? The leading indicator of housing activity is based on signed real estate contracts. Okay, so it's not actually good. Well, let me see just the chart. Today was down at, oh, okay, it's always oscillating and then back and forth. It's not a big deal. There's obviously a lot of volatility. Money, you kind of like back here. So I don't know. I'll have to figure out what that exactly means later. But yeah, let me go back over what I was saying for the day. So looking at the daily chart, this is looking like we're gonna run up to this buy side liquidity previous day high. So let me actually show that here. I talked about an Asia move that I was looking at. So just by looking at the current daily candle, I can see how price may want to make a move higher into a previous day high. However, price is very extended and I don't feel comfortable taking any longs in this. Alternatively, price may want to head back to the new day opening gap, which has not been balanced with the move from high to low. So I'm going down to the hourly chart and talking about this new day opening gap in the minute open. So we're very overextended, and I'm not looking for anything anything long, right? Because of how overextended we are. However, it does not mean we're going to go lower. We can continue to go higher. I just won't be participating, right? So hit those rejection blocks there, those bodies, and we seem to be rejecting a little bit. I want to see if new day opening gap is going to hold price, and this could be an immediate rebalance. And if it does immediate rebalance, then I want it to come back down. And if it does come back down, it would show that it's disrespecting that balanced price range, which could lead to a bigger move down to these lows. But I was talking about this. I'm going to turn the live chat on if it doesn't start to, maybe about 15-30 minutes after buy side liquidity, if it doesn't displace. If it rams through it and continues going higher, I'm going to turn live chat on and then probably just chill out and do whatever. But you know, where was I? I'm talking about the Asian move later, right after this. Um, yeah, I also had the regular trading hours gap here. So from the 16 o'clock close to the 9:30 open, and then seeing price run up, create this gap, supporting it, continuing to run higher. It didn't make me feel good, and so this 5-minute short-term high there, I didn't highlight it and say okay, it's like a breaker. I said I didn't trust this as a breaker because that large gap that was formed and the support we were finding from it. And so I preferred to just tape read this, and I was like simulating like if I was in a trade, what would I be doing? Now, okay, I don't trust this gap very much. It's shown not even wanting to trade into it, so it's showing it does want to go lower. But again, there's a buy side liquidity up there, and so I would be very careful trying to short here. I wouldn't try it. But let me talk about Asia here. So I have this screenshotted from yesterday. That gap there with this short-term low. I wanted to see longs in Asia, but I didn't take this. I screenshotted it for a reason, because I didn't feel comfortable taking it. And the reason I didn't feel comfortable taking it is because we were in a premium. Feel from that low to that high, we're in a premium. So that was right here. You see that shaded gap? That was right over here. And so what happened then is price came down. Now it is in a in a discount if you go from low to high, and in a better condition to be traded higher. And so if I had actually tried to trade this, I was at a movie and I completely forgot about this. So I had to, at around 9:25, my mom was yelling at me. We had to go, so I wasn't able to study this. But it did play out very nice. It came back down to 15-minute fair value gap, even though it didn't have a really nice 5-minute short-term high with the breaker. It made one more swing lower, so I wouldn't have trusted anything in here. And then once it failed to go beneath this low, then price started to really agitate itself and run higher. And let me see if I can compare with the Dow, if it made a lower low or not. No, it didn't. Alright. But that was kind of like the Asia run. It was a really nice Asia session. And so I was just kind of watching that during Asia. But now back to here. So I'm going to keep that gap on the chart. So at this point now, I'm just really just waiting for price to tip its hand and run either to the buy side liquidity or really start to displace lower with speed and displacement. And we're seeing a little bit of consolidation on these 2 1-minute candles. A lot of back and forth. I'm gonna do a math problem while I wait for price to kind of move around a little bit. I want to kind of like show some excitement. It's not really, doing anything to nothing that I really want to place any risk on right now. If anyone heard my stomach growling, I apologize. I'm kidding, I'm not sorry. bit of excitement. I'm just doing a little bit too much thinking to multitask. But let me just finish typing in the equation. That's right. I'm using complex equations in mathematics to trade. No, I'm kidding. So, alright, there is 50-minute fair value gap, price entered this gap. At the same time, this is completely balanced and price did come up into this range. We still have 11 minutes to the candle, so what I want to see is a very aggressive rejection, and price really showing its hand and wants to go higher. We came beneath that 5-minute low. Now I did say, remember when we came down here, either I'd want to see displacement with speed, or it could be a turtle soup, and I want to see how it's going to act. With how it's looking so far, it looks like a turtle soup. So we'll see if we get any bullish fair value gaps or inverse fair value gaps coming into price, but I would be willing to take a long if it does show like large gaps and nothing small. I really want it to run. This is not what I want to see. placement. I like that. If it wants to leave a big nice gap, that would be nice. I would take that on my account, so let me get that ready. On the oh wow, what the heck? That's a lot of points. Yeah. It's very big. So let me go over to the execution screen. Hold on. It's pretty good now. Okay. And so stop at the end of the gap. I wanted to really get it inside the gap and see if it was going to stab into constant encroachment, but I'm not going to try and time that. I'm just going to get in. I really want to run higher and not really dig into this level at all. So first take profit. I mean, I will. we'll take some partials because this is like a large range. Like I could be holding this for 100 points. So we'll take the first profit off at, yeah, I mean, I'd say this is not a bad area. And then we'll take this, see if it wants to run through, you know, that high and this high, and then see if it wants to get up to that high and hold it. Maybe take one more off at that high and hold it. Or I might just close everything. When I get to break even, back to break even, I'm going to close everything. Probably take a week off. I always do, my performance is always off during non-farm payrolls. And so, it'd be a good week to take that week off. What I'm doing right now on TradingView is I'm visualizing that. Let me just show it here. That 15-minute candle showing large rejection. You know, the 5-minute candle is a nice body higher, and then, you know, the 1-minute chart. Not really willing to run back down into that range at all. So everything's as I wanted to see it, and barely any drawdown, which is really good. If I wanted to kind of keep up a little bit like this, stop. So it already ran like 40 points, which is like, I would not be comfortable if it went back into drawdown. It would probably take up more mental equity, and I wouldn't want to deal with it. Maybe I'd consider re-entry once it stops me out, but I want to make up for the commissions and just have that break-even stop, just in case. It makes me feel better. Preserves, I guess, the mental equity. So yeah. Now that gap there did not fill. There's a small gap at the 1026 candle. Pushed price higher, which is exactly what I want to see in bullish order flow conditions. The 15-minute candle did close. So let me go back to 3. So the 15-minute candle closed higher. So now we can dig in back to that wick a little bit, but I mean, I'd like to see it just continue running higher, disrespecting this down close candle. And 5-minute chart. Same thing, might leave a fair value gap that could be traded into later. So this is a bit of a generous break-even stop. I mean, well, we don't have to put it exactly there. We can put it just a bit lower at that wick low, but I mean, they could still come back down and then still go higher if it comes back down, hits my stop. But I mean, just for my rules, it's just like, this is a lot of profit and a lot of points, and I just would feel more comfortable with that break-even stop in place. Now feeling we're building relative equal highs, so I'm going to move my TP a little bit higher at 2.9. There you go. That should be break even. That's partials. I want to run through these relative equal highs up to this high, more relative equal highs up here into this gap, and I see it continue going higher from there. But I'll probably take most off, if not everything off, at that level there. Since that would get my account back into break even. My finger on the market close. As soon as it, gets back up in there. What I'm wondering right now is, did ICT see this or not? That's something I will be watching later when I take a look at his stream. Honestly, I shouldn't be thinking that. That's why I want to mention it, because I'm trying to compare myself to him, and it's not good. ICT said that the best thing he wants is if you learn how to do this, you never ever come back to my channel. And I feel that, even though he's hilarious sometimes and I love listening to him. But alright, now I want price to really run through these highs, get me back to break even. Come on, baby. I got my finger on the market close. I want to see that 5 show up there in the first number. How much profit have we secured? Doesn't want to tell me. Let me remove this stop, and we'll put a new stop, 2 micros, right underneath that candle there. Well, no, we'll leave it. I don't know. We'll leave it there. How much profit is that? 7. That's 30 points, 2 micros. positive P&L today. It was fine. That's all I should be worried about. And then I'll set a take profit for not this high, but I just want the account to be you know in break even. So I'm not gonna set a take profit. I'm just gonna stay here and look at it. That down close candle should support price and send it higher. And I don't want the 5-minute chart to leave a breakaway gap. So, not see this be traded into. Alright, we're missing, I think, just 10 points from up here. So 48. So let me put a take profit at here. And that should give us our fill, hopefully, if it gets up there. Oh, I don't like that. It's rejecting that candle. I'm very sensitive right now to, I guess, what's going on. As you might be able to tell. Put my stop up here. There you go. So, I just wanted to kill it. It didn't get back to break even, but, it's not a big deal. Secured some nice profit. Now, it looks like it's going to trade back into that maybe 5-minute gap. And I just wanted to cut it here. It could continue running. I don't really care if it does. I might look for, okay, this account is close to break even. This one's almost close to break even. I could look for a re-entry on this one, but I would need, I don't really, oh, let's just leave it for tomorrow. It's whatever. But this one I might look for a re-entry. If it drops down enough and it shows me that it wants to continue higher again, then maybe I might try to re-enter. With obviously less leverage. Not the same same amount of leverage. I have a feeling it's just gonna stay above this and continue running up. There you go. If I had held on to it just a little bit longer, you know, would probably. Oh wait, I need to take this off. Hold on. Ooh. If I had closed it, I would have gotten triggered into a sell. That was close. But want to see displacement above these highs. And I wouldn't really want it to come back down. I don't know why it won't show me the trade. I don't know why it does that. It should show me that where I got in and out if I hover over it. No, this is some boring price action here. I can't figure out. What the heck does trader mode mean? Whatever. Alright, we are, I guess, just done. Let's go back to trading view. I'm just gonna read the rest. I want to see it run up to that buy side liquidity. Nothing in order flow is bearish yet, but you know, just need to remind myself that. But I won't be trying to trade it any longer. Let me get back to my math. Let's see how the Dow and the S&P are. S&P's a lot higher. Dow is, what the fuck is this? I've seen that it acts like this sometimes, and it's just not pretty. Gold is doing its thing. Dollar, oh wow, the dollar's higher. So we were trading in the same direction as the dollar, which might be why it's consolidating a lot more than it should. This looks terrible. I have a friend that trades this. This looks, oh my god. I don't know how he does it. I'm scared of what would happen if he traded the NASDAQ. He'd be winning all the time. Oh no, this isn't what he trades. No, news was there? Fuck. How do I? Wow, that's terrible. What? That's a 36.7 rating. Damn. People in Japan have no chill about the economy. They don't give a fuck about the economy. There you go. That would have take profit would have hit. So I was confident that if I had a break even stop, or if I had a stop down here, that it would normal stop. Of course, it would hit break even. Sorry, not break even. It would hit TP eventually, but you have to understand why I stopped the trade. And it's because I was up by a lot, and $200 still of open profit after the partial, and I was holding on to the trade. Normally I'd be completely out of the trade. I made $400, $500. I'd be out of the trade. Even at $300, that's already a lot of money. Like, to me, $300, making $300 is, I'm not a millionaire. That's a lot of money to me. Maybe not a lot, but I mean, it's a good amount. It's more than what I make at my job. So I see $200 of open profit. That's what I make at my job. More than what I make at my job on, well, basically almost every day. Not every day, but I don't know. It's a mental thing. Like mentally, I was sort of like, well, that's a lot of money, and how would I? Let's just say I'm wrong about this, and it does start to go back to my take profit. Like, how would I feel? Like, I wouldn't feel good about that. I wouldn't feel good. So instead, what I did is I just closed it, and I said, all right, I'm gonna instead wait, and I'm gonna watch the rest of this play out, or I'm gonna come back and see how it played out. And now it serves as a confidence booster. But even now, even when we have this impulse here, we see price come back into this gap and close into it, and then be very sticky. Like, it's not really moving nice and fast like it was back here, right? Not because there's less. It's not because there's no volatility. It's just because the dollar is moving the same direction. So because the dollar is being priced higher today, it puts bearish pressure. Not that it's going to go lower, but pressure on lower prices, or pressure on higher prices, on the indexes. So because they're priced in dollars, right? So the dollar's getting more expensive, these indexes are going to get cheaper. They're not going to, but technically they are getting cheaper in terms of dollars, not in terms of their actual worth. So I'm not saying that when the dollar goes up, the Nasdaq goes down, because obviously that's not what just happened. But here you go, really running now. Now, do I feel bad about closing the trade here? No, because I got very close to break even. Didn't hit it, but I got very close, and I shouldn't feel bad about anything. I really don't. Like, I don't feel it. It might bother me. It bothers me a little bit. I could have held it, but the thing is, when I close a trade, like, I knew I could have held it. I just closed it because I was worrying about it too much, and I felt more at peace and better just closing it. And that's something that from doing this a very long time, I can tell you with certainty that if I had held on to this and it had retraced down here, I would have freaked out. This is why I put my stop at basically where I thought was a discount. Like, I would have freaked out. And even though it's a place that could support price, if it came down here or whatever, I still would not felt, inside my head, I would not have felt comfortable. And I would have wanted to get rid of it. We're also way above midnight open too, so that's like another thing that I try and position myself beneath midnight open. So we're not really in the environment I'm the most comfortable in, and that's like all these things kind of led to me just saying, okay, you know what, break even stop, it's okay, or not break even stop, just close the trade. And I still got lots of profit. I mean, how much was that? Like almost 60 points. Yeah. Usually I aim for 20 or 30 points. So I don't feel bad at all. Now, this buy side liquidity is pissing me off. It's not getting hit. See what I mean? Like, it's every time it's coming above one of these highs, like here, consolidation, here, and in this gap, consolidation, and then this high retracing. So that's just not ideal. Let me, I'm gonna turn on the live chat. I don't know, let me see if anybody's even watching. But if anybody is watching, I'm gonna turn on the live chat. Okay. How do I do that? There we go. Live chat. How do I? Okay. There. Somebody's asking me something in messages. So he's saying he wanted today to go lower. Oh, this is pissing me off. Go away. This is why I'm always do not disturb. Oh, alright, there you go. So he was saying that he's showing unwillingness to push into relative equal highs. Talking about here. It's yesterday, bearish order flow. We rejected off a random low, random gap. I thought we were gonna push through them. Do you have any idea why we didn't? Hello? Hello?
Yo, hello.
Can you hear
What's
me?
up, man? How are you?
Good. Good. So what were you trying to tell me in Discord? Show me your screen.
Um,
Like share your screen so you can
yeah,
point at it.
yeah. Let me share my screen actually. I'll share my Notion because I have one or two on there.
Sure.
Um, do you want to hear why I'm bearish?
Yeah. Why were you bearish?
Okay. I have all of the notes here. So you see the breaker that we have on daily time frame. This one here. This big up candle here.
Let me mark it on the daily chart. Yeah. So you're looking at this candle. Sure.
Yeah.
However,
I
I
don't
don't
think
wait. I
that.
don't really like that as a breaker though, because the
I think on the 4 hour it's more clear. Here
no,
on the four
I
hour
know,
it's clear.
but you see like August 5th where it made the low. Usually breakers they're not the low isn't displaced. Like when it makes the low, it's not usually not displaced lower.
You mean the lower low, like the low high, lower low?
Yeah, the lower low, it usually doesn't displace that far.
Um, I agree with you, and
So
I was gonna say that yeah, I agree with you, and I was gonna say that I don't think that the breaker's gonna hold. I don't like the breaker at
oh
all.
okay,
I don't
yeah,
want
I
it
know
to
what you
hold.
mean. Okay, okay.
And I don't want to read everything, but basically the entire reason why I don't want to see it hold is first of all because as we create the breaker, it doesn't look like a market shift to me. It looks like it's a soup, especially how we reject off of the rejection block here, and how we start to see like a shift in market order flow, and we start respecting up those candles, and we start to trade lower.
Yeah.
And also, as we take the breaker, like as we finish the breaker, taking the breaker high, you can see that after we take the high, we accumulate a little bit, and then we start to run back higher and create another breaker, and that's exactly what you want to see. You're bearish. And another thing that I wanted to note, um, yeah, here. So you can see like you have prior recognition. You can see that price is just trading lower, trading higher, trading lower, trading higher. And today I had the same idea. We're gonna trade into this and start trading lower. So I wanted to catch shorts off of that. So basically, that was the whole idea for my daily bearish bias. But for the trade, I took a loss on that actually. Where is it? It's
Wow, it's a lot.
yeah, here. I took I took this loss here. Um, so basically, what the loss was I had an idea that we were going to reach towards the relative equal highs, and I had wait here. So I had this in mind. This was one of the ideas I had in mind, which we were pushing to this mediation block, have a second sweep, and then go to relative equal highs.
Yeah.
But when that didn't happen, and it spent so much time like moving around here, I was out of the idea that we were gonna go to relative equal highs, and I noticed that we pushed back into a hourly gap that we were in yesterday, and I liked how price reacted off of the sweep, and I like how price started pushing lower immediately after taking out the hourly candle, the hourly mitigation that we had from yesterday. So that we ran higher, immediate shift in order flow, we get the inverse here, then this breakaway gap, then we start trading lower, you have an order block, and push lower. And then once I saw this kind of like mediation block here, I wanted to see price trade into there, reject lower, and then take it high and then start trade lower towards that first um, first hour range gap, and I want to take it there. But I got shut out almost immediately, and I don't see a reason why this gap here had. No, it doesn't make sense to me that after all of this, after reaching to the hourly gap and after rejecting off of that, rejecting this mitigation block here and not reaching into the relative equal highs and respecting the hourly gap, why would we suddenly just start to move higher? I recognize that we have this sweep here, but this doesn't make sense to me when I put in high time frame framework. This sweep doesn't make sense to me. I would just like to hear what you
Wait. Let me share my
what
screen.
you had in mind.
Let me share my screen. Uh, so can you see it?
Um, just give me 1 second. I want to screen record this so I can watch it later.
I'm streaming too right now. If you
Oh, you're streaming?
Yeah, you can watch it, or screen record actually, yeah, whatever's easier for you.
OBS
But is
recording.
that okay if I'm streaming? I didn't ask.
Yeah, of course, of course. Of course, no problem.
Wait a minute, somebody's saying my voice is really low. There it is. Better? Okay. So what I remember I told you yesterday, um, there was a lack of manipulation. And just if you look at the hourly chart, you can see like there isn't really much manipulation. Like we have consolidation. We have a move lower on Monday. No, wait, where's Monday? Here, Monday, and we have consolidation and another move lower. But in all this consolidation, there isn't really like, Tuesday didn't see a trade up to here. It left relative equal highs, then we traded lower. Friday didn't really manipulate. No, sorry, Monday didn't really manipulate at all above Friday very much. So there's like a lot of basically low resistance liquidity building up like this. It's like building this little trend. So price could easily stab up through this or maybe halfway through it or whatever, just to disrupt and kind of give the idea of a breakout to induce liquidity, right? And then bring orders into the market. So whenever you see that, where there's no really like jagged price action, where we have like up and down like this, and it's just kind of like a little trend. Price loves to disrupt that, okay, and then go back down. So I was not wanting to go short, um, obviously because of that. And so when we got into this level here, which is a daily inverse fair value gap from back here, and I woke up in the morning and then I saw a chart like this, I'm like, okay, we're without going to any lower time frame. I knew that we were probably going to run up to the previous day high, those two relative equal highs of Tuesday, Wednesday. And so this is what I said. I can see how price wants to make a move higher into previous day high. However, price is very extended and I don't feel comfortable taking any longs in this. So I needed to wait until I see some discount pricing. And then I mentioned new day opening gap. Now, if you go down to the 15-minute chart or the 1 hour chart, all right, 9:30 opens up, makes it run higher. Now, I think what you were doing is focusing on the 1 minute chart. And I'm not saying it's wrong, but if you look at it from a 15-minute perspective, you tried to short here as price was entering a 15-minute bullish fair value gap in a discount. So if you just toggle regular trading hours, it's a discount, or from here to here, price reached a discount and entered its the only fair value gap really in the whole range from premium discount to premium. And then you were trying to short off that. Price rejected and left a large wick, which stopped you out. And so I hope now this might help you to see why you kind of got stopped out. And alternatively, there was also this low here, which I don't remember in the stream if my voice was muted or not. I know I was muted for the whole beginning of the stream, but that was unfortunate. But I did talk about this low, and I said that okay, as price was coming up above this high and then this high there, I said if price wants to target that low, I want to see if it's going to displace and run through it, or it's going to hit it and then quickly run up and reject from it, right? So this is what happened. It rejected from it. You go down and you see a large fair value gap. I would have had a break even stop, or well, I mean, I'm not saying what I don't know what I would have done in your scenario. I'm not going to say what I would have done, but like I wouldn't have been comfortable shorting here as prices already kind of ran and went down to a discount, inside a higher time frame fair value gap. So that's just what my take on it. If it helps you, that's great. What do you think?
Okay, yeah, that makes sense now, but I don't get
Wait a
how.
second. Wait a second. Uh, no, actually, yeah, keep going. Never mind. I'll answer this comment later.
I mean, I get the idea of the 15-minute time frame and how you wanted that to hold, but you know, with my bias being short, I wouldn't have expected that to hold at all. I would have just liked to see that being pushed through and go lower to fill the opening range gap. Is there anything wrong with my bias? did I miss something other than the low
Wait,
resistance? What
seeing
what
this
happened?
get pushed through this here, seeing that low
No,
get pushed.
yeah, yeah, yeah,
Yeah.
yeah. I wanted to see it get pushed through. I didn't want to see it be soup,
Oh, I mean,
like how you were saying.
there's nothing wrong with that. Yeah, there's nothing wrong with that at all. But I think if you want to trade it, you should wait till to see that happen. Because if we had pushed through this, there would have been a reaccumulation probably, and then the price would have came back into a premium, and then tried to find some idea of resistance in a gap that would probably been created pushing through that, and that should have been institutional order flow entry drill. So I think what we should have done is wait for that to happen, because like I didn't buy this low, or I wouldn't try to buy that low. I would try and buy evidence that we're rejecting that low, like this gap, or this inverse value gap, or maybe this order block right here, you know. And I would personally, me, I wouldn't position myself up here because I try and buy in a discount. So measuring from low to high, I try and buy in a discount, right? And so this is what I would have tried to do. You were trying to position yourself in a premium, sorry, in a discount to go short. So if you measure price from high to low, you were trying to go short in a discount without evidence that price is pushing through it. So you're basically, I would have said if it would have pushed through and that trade you had would have worked, I would have called that luck. You know, like it just happened. You happened to be right. I don't think I would have been taking that short with conviction, personally.
Okay, I want to just clarify what you said. Are you saying that basically I shouldn't have taken that short because, first of all, we were in the deep discount of the leading range, and also because I should have waited to see what we do at the low
Mm-hmm.
and not basically kind of, I don't want to say gamble, but guess that we're going to push through it eventually?
Yeah, like if that's a model, a pattern you're trading, and you want to trade it with a probabilistic mindset, there's nothing wrong with doing that. But you know, with what you're trying to do, you're trying to find evidence, and that you're 100%. I mean, at least that's what I try and do. I'm pretty sure you do the same. You're trying to take a trade when you're 100% sure everything's lining up. You know, like this is what I'm saying is there's nothing wrong with your bias, with having that bias. You know, you can make money when you're wrong, you can make money when you're right. There's nothing wrong with your bias. I don't like how, you know, if I was taking your trade, I don't like how I would have been positioned in a discount shorting.
Is that the main take for the trade?
I guess I would be that's kind of like what I'm trying to convey. Yeah, the point.
It's just one last question. Can you go on to the time frame for a second?
Yes.
You pointed out that 50-minute gap in a discount, and you said that I was shorting it. Um, you know, in my logic, um, wouldn't you also say that that gap could have also been pushed through because of all the ideas that we've been violating for um, trading higher towards relative equal highs? Everything that was leading us towards relative equal highs was being pushed through and being disrespected. So when I saw that mitigation block get formed, I thought we are gonna push for the 50-minute gap.
Yeah,
Or did I make
but
any mistake there?
I think it would be beneficial if you go back to my stream and watch what I was thinking, what I was saying as price traded into here. But what I was really looking at was I wanted to see evidence that it would reject higher. And so I didn't buy down here. I didn't buy the 15-minute fair value gap. I waited to see evidence. It first hit it here, and then it came back down, and I said I didn't like that. I wanted to see really like excited price action to go higher. Failed to make the new low, and then it exploded higher. And then I'm like, okay, this is better. This is more so what I want to see. So that's so like I waited until I saw evidence that it would actually push up in case, because why? We were super high into a premium on the higher time frame, and even though it can keep going higher, I wanted to really be sure that it would and find support off of this. So I wanted to see evidence of that. But now I bring you back to just my analysis. You know, it was looking like the daily chart was going to run to the previous day high. And so my bias was higher. And this is why I was more comfortable seeing it reject higher off of this gap, right? To, you know, price hadn't seeked a discount yet. And so this is what it did here. is went for a discount. Alternatively, too, look at this high, how it rejected from that high, and look at 9:30 where price closed up here. So it created that mitigation block, but where's the turtle soup? It displaced far above that high, and it's shown that price does not want to be held by that daily fair value gap high. This is the inverse daily fair value gap, the blue line, and it's really pushing higher into this range to run up to the buy side liquidity up here. And so this is like seeing shorts off of this just from a higher time frame perspective. I wouldn't have liked it, but if it did want to short, I would have waited for evidence, clear evidence that it does want to inverse its 15-minute fair value gap by seeing displacement lower. You right?
I want to say something. My evidence towards pushing through that 15-minute gap was how we were shifting order flow after tapping that hourly gap. I think that was the mission I'm trying to deliver. That I saw enough evidence to move lower. That we were going to push to the 15-minute gap. And that we were going to be far away from the relative equal halves, and I don't think we're reaching to them. That was like my thought process behind it. That was my evidence.
Yeah, I mean, that's not bad.
Evidence.
You just didn't wait to see if that was confirmed.
What do you mean?
Like, when we pushed down here, all we did is we seek discount. So in the 15-minute chart, just by looking at this, is this candle at 9:45 is the order flow bearish? Let's say you replay down here. Is the order flow bearish here?
There, no.
No. So now if when we go forward, as it's like this, and the body's down here, now it could be bearish, but we need it to close. This is why I was saying at the stream I want to see the very quick price action higher leaving a large wick, because I didn't want this up close candle to be closed beneath. I didn't want this to act as an order block, a bearish order block. So I wanted this gap to support price, and I waited to see if there was evidence of that. So like I don't think it's valid to have I think it's valid to have a short bias, but I don't think it's valid to say that when it was down here it was bearish.
I wanted to ask, you just said that you didn't want to see the up close candle used as a bearish order block.
Yeah.
Does that stem from the idea of having a bullish daily bias, or is that from something else?
Yeah, well, yeah, that bearish bullish daily bias, and then that's what I would want to see to line up with a bullish daily bias. I wouldn't want price to close down here. This entire range from this high down to this low, the wick that went up and back down and back up, this is completely balanced on a lower time frame. So I wouldn't want price to spend much time into this, and then it didn't. It continued higher, right? So that fair value gap, if we reach down into that gap, I really wanted price to be supported by this and to show large rejection higher. That's what I was seeing as after price traded down into this. So I don't think it would have been valid to say once we hit this area to be looking for shorts until it actually shows evidence that it wants to go down by closing through this gap.
Okay, I think I understand it.
Yeah. Was this your mechanical model?
No, it wasn't. No. This is I'm not going to be trading the mechanical model anymore. I'm just going to be sticking to discretionary.
Discretionary.
I don't trust
Okay.
Just yeah, I'm not going to be trading my mechanical model anymore. I don't like it.
No.
It feels too scary for me.
I'll say it's much easier to trade a certain. I mean, it's harder to trade discretionary, in my opinion. But I'm still a discretionary trader.
It's harder, yes, but I think psychologically it's easier because
Yeah,
you have
I think
kind
so.
of confidence in trade.
Yeah. Just sometimes.
Mechanically, it's just like.
Yeah. I get it. Psychologically, it's gonna be easier, but you're just have a lot less trades, and if you can deal with that, then that's great. Anyways,
go
ahead.
I want to say the last thing before you go. Taking this trade today, I think when I took it, I de-risked like to 0.25%.
Yeah.
Because I knew I knew that we had that 15-minute gap, and I was kind of guessing that we're gonna push through it, and I realize now that how you say that push lower was just a retrace from an overextension, just reaching the discount. And I don't
Yep.
know if there was a way for me to see it as being respected just because of my bias, but it's
Yeah.
something I should look out for. Yeah, so
Did,
I'm
did
definitely gonna take note of that. Thank you.
did you go into the day thinking you're gonna risk less?
No,
So why'd you de-risk?
I de-risked because I wasn't so confident in it, to be honest.
So why'd you take the trade at all?
It's a good question.
Yeah.
I think I was
So-
overconfident, maybe.
Yeah, maybe. Maybe just wanted a win. Tons of reasons why, and I don't know. You have to figure it out and journal it. Some guy commented, "Can you trade in crypto or forex like Bitcoin or gold?" I don't know what that means.
What? What is that question?
Yeah, I think he's asking me if I'm able to trade crypto and forex like I trade Bitcoin or gold, but I've never traded Bitcoin or gold.
How many viewers do you have?
I don't know, just 2 concurrent viewers. I think this guy left because it went down to 1.
I'm surprised you have like an active following. I'm not gonna lie.
I mean, I've been doing it for almost a year, more than a year, actually. 4 likes, it's pretty good. But I'm not really worried about how many people watch me. I feel like ego is gonna get in the way if I worry about that. I'm really liking that book shared, by the way.
Ego is the enemy.
Yeah.
I'm gonna be re-listening to it. I've read it once before, but like actual reading. But this time I want to listen to it.
Yeah, it's great. I was driving yesterday just listening to it, and I've been thinking about listening to it during trading. It says a lot of real
I
stuff.
was actually listening to it while I was listening to it today while trading in the early AM session, like at 9:30.
Yeah. I came up with a quote. You know, I don't speak for my achievements. I let my achievements speak for themselves.
Nice. Wait, I wanna ask you a question. Wait, let me share my screen. You see my screen?
Yeah. I don't see it. No. Okay. Wait, I see it now.
Yeah. Okay. Look, I have my first demo evaluation, which is 50K, and I'm done with it. But I'm gonna do a new one, 150K, and I wanna have it separate, but in the same section. Like I want it to be in the follow-ups, but I want it to like be in a separate kind of page. So you see here, 150K is here, and then like another tab, to 150K. Is that possible or?
Yeah. I don't know. Okay. I don't know how to do it, but no. Okay. Yeah. I know how to do it. So just create a new page. Create new and then create new page. At the bottom, press the new button.
This one?
Yeah, that. And then page. Type page. / page. Or no, that is a page.
Oh,
Why doesn't it bring up the drop down? Huh? Is this a database?
how do I know? It's
This is a database. Yeah, this is a database. Okay, so you just gotta create a new page. So go to private. Go back to private. Wait, someone said, the guy said, "Can you make a pink block? Can we set BPR?" Wait, you marked pink block. Can we set BPR? What does that mean? Wait, which? I'm sorry. Can you rephrase your question? Wajid.
Who's on your stream? 1 second, I want to check out your stream.
I don't understand what he's saying though. So I have this pink block marked. I have this marked because, not necessarily because it's a balanced price range, it is, but because it was showing support and then resistance and back to support. There's a real support and resistance.
Why is it calling you sir?
I'm not going to. I mean, I find a lot of Indians do that, and
Yeah, I
it's
know.
just
I know that too.
stereotypical, I guess. But
From his name as well, he's probably Indian.
it sounds like a Muslim name though.
Wajid Shah. I've never heard the name of him, honestly.
Hmm. What was I going to do before this? Oh yeah, show you. Go to your Notion. If you go to private or wherever.
Is this one here?
Yeah. Click new, add page. Yeah, so see, like, this is the page, but if you go to follow-ups, that's a database. So if you right click follow-ups or press the three dots, you're gonna see that there's no like it doesn't tell you what it is. No, yeah, is there a turn into? Yeah, there's no turn into option, right?
No,
Yeah, there isn't. So it's because it's a database. You can't turn into anything. See, if I show you my screen. See my screen, how when I go on trades, this is a database. It's a view of all my trades, right? So I can filter them, but this is all the trades I've ever logged. Okay, and if I go and right click trades, I don't have the option to turn it into anything because it's a database. But if I go to my school, for example, I can turn it into a team space so that other people can come on here and customize it and add things to it, or a wiki. And this is because it's a page. So if I go to the school page, now I have anything that I can add. I can add something else, and like that. So same thing in trading. I have all these different months. So what you want to do is you want to create a new page, and then you want to drag your follow-ups into that page. Like that. And then you can add more things.
There it is. I did it.
Okay, somebody asked. I understand this question. He asked, "Can you explain intermediate term low, short term low, intermediate term low, short term low?"
Actually, he has a whole channel.
Pakistan, not Indian. That makes more sense, actually. Yes, I should have guessed that. See, look at that inverse, the support and resistance gap. There's no algorithm. So I guess, do you have any other questions, Sisida?
No, not really. I'm just gonna have to rewatch my recording and try to figure out for myself why it happened and how I'm gonna avoid it next time. But yeah, thank you for
Alright.
the quick listen.
Welcome. I'll get back to my stream. Bye. Okay, so intermediate term high, short term high, intermediate term low, short term low. So, basically, intermediate term high and low. I've heard many different definitions for it. I don't really care to have the right definition, but from what I remember, is ICT calls intermediate term highs and lows, highs and lows that are made in fair value gaps. So, for example, this low is an intermediate term low. This low is an intermediate term low because it was formed in a fair value gap. Same with this low. It went through a fair value gap there. And so these lows kind of like act as, the way I view it is, if you go to the higher time frame, you see these lows are higher time frame lows. And sometimes they'll make like this low is a good example. This low right here at 945, it's the high of a 15-minute fair value gap, but on the 5-minute chart, it's a low that was formed in a large fair value gap. So on the higher time frame, you see how this, if you imagine this low as it's coming back down, what this is doing is it's leaving a fair value gap on the higher time frame, which is why it's called an intermediate term low. So qualifying the right intermediate term lows are important. Another, I guess, example I'm going to try and find was if we look at maybe back here. Okay, if we look at this is an intermediate term high, so let's mark that. And what is price doing as it's trading back into this gap? You'd want to see on the higher time frame if this is, let me make sure this is visible, if this is a fair value gap high or low. So I'd expect it to, yes, there you go. See, there's an hourly gap there. So this high is an hourly fair value gap. So what can you expect if price hits this intermediate term high is a little bit of resistance. So let's see. Oh, it's not visible. Fuck. Give me a sec. So let's see if price is, yeah, see it comes into it, rejects it. So basically this intermediate term high is a place where you can take profit or partial, right? It's a good place to see it. Look, see how it resisted it and it came back down here, and the body respected that very nicely. So that's a place you can take basically profit. Now I don't worry about intermediate term highs or lows like too much. I just keep them on my chart, and if I might take profit at them, or use them basically to spot higher time frame fair value gaps like I did back here with this one. But then there's short-term highs and lows, which are just, those are completely different. If you think about a trend, there's long-term highs and lows, or old lows, and then there's short-term highs and lows. And so the long-term highs and lows, like this one, this is an old low, it's a long-term low. But then there's the tiny one here, which is a short-term low, because it's on a shorter time frame, or there's this high, which is a short-term high, because it's not really spaced out. And so it's basically, if you're trending like this, try and spot the short-term highs and lows. Well, let me change color. This is an old low, long-term low. This is a short-term low, short-term low, short-term low, another short-term high. No, not low, sorry, high. Short-term high, 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 short-term high, short-term high. This is a short-term low, short-term low, short-term low, short-term low, short-term low. And then the long-term highs are the spaced out ones, the ones that are more spaced out. That would be like this one over here, this one here, this one here, spaced out. And so these short-term lows, you want to see them get ran through. You want them to not resist price and not create turning points. And they are used to basically create liquidity, build up liquidity, and trend. If you want to know more about the highs and lows, a long time ago, I'm pretty sure this is unlisted, so I'm going to share the link, but I had made a presentation when I was just kind of learning about all this stuff. Let me find it. It's deep in my videos. I'm going to share this, and I'm probably going to end the stream if I can find it. Yeah, it's private. It's unlisted, so I have to actually look for it. I want to learn SMC or ICT in deep. SMC is ICT. Okay, it's the same thing. The best thing you can do is get off my channel and go watch ICT's video. He's streaming every day. So if you want to learn, go watch ICT streams. and I know they might be hard to keep up with, but I'm not going to make it any shorter for you. I can guarantee you that. And he won't make it short for you. The only really way of learning SMC deeply, like I guess you might think I do know it deeply, is to actually sit there and watch his videos and take notes. If you don't do that, you won't learn it. It's pretty simple. So, it's up to you. You have the choice. I can't actually find the video. Shame, it was a nice presentation. Ah, no, I found it.
And filled it completely. This is still a BIST because the candles didn't completely
There we go. I'm gonna share it with you.
shift in the context that liquidity was grabbed.
Yeah, you can ask one more question. Go ahead. I will. If you want to know where to start with ICT, just watch his current live streams or his core content or his 2023 or 2022 mentorship. That's my opinion. The most ideal if you watch all of them. But that's also going to take hours. If we mark short-term high in higher time frame, so in low time frame we mark intermediate term low. Yeah. Well, they can be both. Like a short-term low can be an intermediate term low. It can be both. The intermediate term low is just, I guess think of it as it's a low that has implications on two different time frames. So it's important on the lower time frame, but it's also important on the higher time frame because it can represent a higher time frame fair value gap. Because if you try and picture what's happening on the higher time frame when you have a explosive price run, okay, and this is a lower time frame in yellow, and it's retracing down into it and it's continuing higher. On the higher time frame, what it's going to look like is it's going to show you a large candle like this, and then it's going to then show you a wick down like that, and then this is going to then continue higher. If you imagine the boxes are candles. No, didn't really do a good job, but if you imagine that these act as candles, and it's going to continue higher like that. Alright, so as it's coming back down, maybe actually this is better. That shows it better. There you go. So see how we're running up, we're coming back down. So this intermediate term low, which was formed in a fair value gap, right? If you know what a fair value gap is. Damn it, no. Like this. Okay, on the higher time frame, this low intermediate term low right here, right? This is important because it's the high of a fair value gap, of a higher time frame fair value gap. I watch all of them, but I have some doubts I wanted to clear. Really? Wow, you watched more than me then. So I would say you have some doubts and you watched all of them. I don't know, man. I'm just trying not to call bullshit. Because if you watch all those videos, and you have questions for me, I don't know, man. I think you need to rewatch them. Did you take notes? You should be checking your notes. I think too, to be honest, too many people watch his videos and they don't actually go into the charts themselves. Like I didn't watch all his videos, and I might know more than somebody that watched all his videos. But because I would pause his videos and I would go into my charts and I would try and see what he's saying, that's how I'm able to, I guess, have a better feel for price action. Like when I see price show a signature, I recognize it immediately, not because I watched all his videos, but because I went into my own charts and I screenshotted the things he was telling me and I looked for it every day, before moving on to the next video until I got comfortable with it. Every time he added something, I would take some time with it. I'd spend some time there and I'd get comfortable with it. So this is what you need to do. What I just told you, the intermediate term low, go back in your chart and look for it. Look at when we made lows and fair value gaps and see how price reacted to them when it came back to trade into it on the higher time frame and lower time frame, and look for it ahead of time. Go ahead and go forward in the future and forward test it, right? And then journal it, write it down. Don't try and trade on it until at least 6 months you've been doing it, just looking at, don't even paper trade. Just spend half a year or even a whole year just looking at price, just reading price action. Like me, for example, this stream, how long did I spend in a trade? Maybe like 20 minutes. How long did I actually stream for? 2 hours. And I've been looking at charts for longer than that. So you have to spend a lot of time just reading price action and spending some time with it. You can't always be, you can have just a model where you get up, you go on chart, and then you just look for one thing and you take the trade and you're done within 10 minutes and you spent 30 minutes on a chart. But that's not, you have to have a specific model for that. And you might not have that model. And for study purposes, that's not ideal. For study purposes, you want to spend the most amount of time doing nothing, if not all the time doing nothing. But anyways, that's it. We're almost at 2 hours, so I'm going to end the stream before we get there. So I won't be able to say that I sat here for 2 hours talking to myself. I'll say I only did it an hour. Anyways, that's it. Have a good day.